good comedy, though.
Geroge Gero is here with us. Good to see you, George.
Well, thank you for having me.
We're glad
it's an exciting day, believe it or not.
It is in your world, especially.
I didn't think we'd have any excitement this week. Short week
I
after
didn't
a
either. I
holiday,
thought, gee, tomorrow a lot of people will be off, and so a shortened week. It started late, and here we are. New highs in some precious metals,
including gold,
especially. Of course, I've been following the ratio silver to gold recently, and silver really is coming up, and it's now $20, substantially right about where the technicians like it to be. And gold is at $12.60, which means all those $12.50 calls that I saw transacted on the floor a little while ago, 2 weeks ago, are in the money. So I think there's going to be a lot of tug of war in the next couple of weeks about this price area.
So, why though? I'm sorry. Why is it moving like this?
Well, the mining companies love to sell 1250 area calls because, of course, it's revenue producing in the long run, and so the trade is short the gold essentially for their future production. On the other hand, the buyers that were the hedge funds and the money managers who like gold are now in the money. And so that is going to be forcing a lot of volatility. And of course, the higher the price, the bigger the volatility, percentage-wise.
Because you're thinking the more they're in the money, the more apt they are to get out.
Because on COMEX, the options become futures contracts. They aren't cash settled, so that if you're long a call, you will get long a futures contract on expiration if it's in the money. And if you're short a call, you're automatically short a futures contract. This upcoming December contract is the biggest open interest contract on COMEX. It's huge, which means we're going to have an unusually big rollover from December to February of next year, just in a couple of months.
Can I ask you something? Somebody just wrote in and said, I don't understand investing in a volatile metal. Real estate, as an example, is a better inflation hedge because you can actually earn dividends in the form of rent. It's a
you
fairly
could.
decent
On the
point.
other hand, real estate is not liquid, not portable, and you can't.
But nor is oil. We were just talking about that.
But gold is portable and liquid and has no allegiances and has become another currency. And yes, real estate probably has its place in alternative investments, and of course oil certainly has its place in alternative investments because it's a black gold. On the other hand, today, in order to be a commodity analyst, you can't just watch the commodities that you're used to. You have to look at interest rates, you have to look at political views, headlines, weather, shipping. You have to look at certainly currency movements and interest rate pronouncements and the movements in the stock market. So you've got to have eyes in the back of your head practically 24 hours a day.
All right, so the conventional thinking is dollar goes down, these dollar-denominated currencies go up. Oil, gold goes up. There's an inverse relationship there, although that's certainly
well,
not
look
been the
what
case
happened today. There's a divergence. The stock market is up and gold is up.
Yeah.
Okay? And crude did have a rally. On the other hand, there is so much crude around that we have to assume that the rally is not need-based. In other words, it's not being refined yet for the winter for heating oil. By the way, that's where I like platinum and palladium, because platinum is used, I've mentioned that before, to crack crude oil into heating oil and gasoline. So the oil companies need platinum. The jewelry trade likes platinum also because it's a higher priced, and it's always been higher priced, so there's not as much sticker shock in platinum jewelry as there will be in gold. I like platinum, and I like palladium, which is the cheaper version of platinum.
So you like industrial metals?
I like some industrial metals.
But so wait,
I like some industrial
it's a metals
metals.
picker market and a stock
but it's
picker
confusing,
market.
right? Because if you like the industrials, how come you don't like? I mean, then you should be in crude as well, because then we're making a bet basically on the global market expanding, which we're sort of seeing that it's slowing down.
But there's so much crude that it's difficult for it to make headway.
So too much supply include, not as nearly as much supply in platinum and palladium?
And, of course, there's copper. I mean, you look at your cell phone, you don't think of copper, but if you look at the lights on the ceiling, every building has to have copper wiring. And if we are going to have added stimulus, even though the administration today is not calling it stimulus, but some sort of a kicker, and you are going to have a rebound in housing, you're going to need copper. And, of course, if we're going to have a very good car year, in China, for example, having a super car year, they're using nickel and chrome and steel, and all the automobile industries have to have today a catalytic converter for every country, which years ago they didn't. Yeah. You had an assembly line that went to the United States and Canada, and then you had an assembly line that went to countries that did not need catalytic converters. There was no green law. And now, today, the automobile industry has one assembly line. Every car gets a catalytic converter. And now you're also going to have more diesel engines, more diesel-powered cars, longer gas mileage. They use more of a catalytic converter. So, yes, I like platinum and palladium.
Big time. George, thank you so much. Good to see you again.
Thanks, George. Thanks for coming up today.
Always gets us up to date on what's going on with commodities, particularly the precious metals and the industrial metals and oil and gas, and we need to know all about those things.